My name is Mark Burch with Templeview Capital. Today we're going to be talking about how you make money with short-term rentals and the financing behind it and really how this all started. And we'll get started with my counterparties introducing themselves. We'll kick it over to Mr. Matthew Schlegel.
How you doing, everyone? Happy to be here. Matt Schlegel. I am the National Sales Director at Templeview Capital. I have been with our entire firm for around 9 years now. I've known Mark and James for almost the entirety of that time. Pivoted into Templeview Capital around 2016. Started off in originations there and quickly grew with the firm. And now I run basically all things sales and processing related at Templeview Capital. Happy to be here.
Hi, I'm James Baisley. I am the National Outside Sales Manager for Templeview Capital. As Matt said, we've all been working together for several years. I think about 8 years altogether. We worked for a non-performing note company before this, under the same hedge fund umbrella. And Mark and I actually have a short-term rental business as well, where we're partners. So we're actually immersed in this ecosystem.
Yeah, and I guess it all started, the short-term rental craze is you guys all know it's probably the biggest asset class that's piquing everyone's interest right now. But it all started for me. I bought a house in 2006, actually 3 houses in 2006 at the all-time worst times to purchase. We ended up closing. They were pre-construction. We ended up closing on them in 2008. And shortly thereafter, the bottom fell out. What happened at that point was, before our types of loans existed, we put the loans in our own personal names. And so I had these loans on my credit report and they were in Mark Burch's name, but here's the problem. I couldn't do anything with them. So in 2012, I couldn't get market rent to really come into play. So I was actually forced into figuring out what the short-term rental business was all about. And these were vacation homes. One was in Florida, in West Palm Beach, and the other one was in Bethany Beach, Delaware. So basically what I did was I had a buddy of mine in the basement. I had somebody, and then upstairs I had 3 bedrooms, 2 baths. And what I did was I basically said, okay, let's put it on short-term rental, and people rented it. I was blown away. So I had people renting the upstairs. I had a buddy downstairs. I was getting good reviews. It just started working out. And guess what? I was able to make that mortgage payment. And that was which was key during this time frame. We want to fast forward, because I was doing that all along, and I had another place in Ocean City, and we fast forward the opportunity with short-term rentals. Then you had COVID hit, right? And what happened for those people who didn't know, the short-term rental sites like Airbnb, VRB, they shut down for a period of 2 months. Okay, when they shut down, a lot of people that owned the short-term rentals were very scared how to make the mortgage payment. There was a lot of unknown factors there. And one of the things I told myself is, all right, we got to figure this out. So I did put long-term tenants in these houses during that time, which actually turned out to be one of the worst, opportunities, because as soon as the restrictions lifted and we were able to do short-term rentals again, the demand for short-term rentals went through the roof. People did not want to stay in hotels. People wanted to go into Airbnb, VRB, short-term rentals to have space, to have staycations, just be away from their house. And so the craze was actually there. But one of these things, something really crazy happened. The people that never went to short-term rentals went to a short-term rental. And they were like, oh my gosh, there was so much more things for me at these houses, so many more amenities, so much more space. I don't need 2 hotel rooms because I have kids. I can stay in one house. So all these people really found the short-term rental business to be better than the hotel business. And so then there was
Mark, that's a good point too. Like, if I can jump in, if you've noticed, or if anyone has noticed, a lot of the big hotel chains like Marriott and Hilton, instead of buying up hotels all the time, they're buying up houses. They're buying up single family houses. They're buying up luxury rentals. Marriott has a homes and villas program now. Like, it's not just investors that are getting into this market. It's like the big guys, the big hotel players. So exactly what you're saying is true. People would rather rent one big house for their family than rent 2 or 3 hotel rooms.
Yeah, and it's one of the things where, you know, to James's point, that you see them getting into it. You're going to see, you know, the hedge funds getting into this space, because there's a real opportunity here, because, you know, everyone knows, are we at the height of the market? I mean, is there a correction? The numbers are, and we'll go over some real numbers that we have, but the numbers right now for short-term rentals are 2 or 3x evaluation of a house. So that's why this asset class has got a lot of juice. I'll say one more example of the loan itself, how we created this loan, and then I'll turn it over to Matt to kind of go over, you know, the underlines of how that loan works. But we're sitting at a conference in Arizona, and we were sitting there talking to some people, and we're all like at a bar having a couple beers, and you know, we were sitting there talking about loans and how they were not able to get financing for their mountain homes. And I started talking to them about it. I mean, everyone knows what a DSCR loan is, a debt service coverage loan, where we look at the asset and we give a loan based on the income of that asset. Now, all of this before last year was based off of a long-term valuation. So whatever that market data said on, you know, what you can make per month is what we went off of. These guys were sitting at the bar showing me the back end, so how much some of their comparable properties were making, and these were very expensive homes, 1.4 to 1.6 million dollars. I think there was almost a $2 million home in there as well, and their back end spanned to 180 to almost $300,000 a year in rental income through short-term rental sites. Okay, and if you look at the opportunity there, the long-term data said that these houses were like $7,000 to $8,000 in market rent, but some of them were grossing close to $40,000 a month in market rent. However, they couldn't get a loan to be able to, you know, from a bank like Templeview or anyone else back then, because no one actually created a loan that would support the data. And so we did create that. And before, you know, James and I talk a little bit about how you can actually make a lot of money doing this. Matt, why don't you talk a little bit about how that loan is structured?
Yeah, sure. So, yeah, to Mark's point, just quick step back, Templeview Capital, for anyone who doesn't know, private money lender. We finance all non-owner occupied investment properties, products from ground up construction to fix and flip to DSCR. Our company was founded by investors who have Airbnb investments. Mark has Airbnb investments. A lot of our employees have invested in Airbnbs and short-term rental properties. And so, you know, we're really cognizant of the market change and the demand out there. And so, to Mark's point, not only at this individual experience that he had talking to these people with mountain homes, but my entire sales team was just constantly getting calls for, can you finance my short-term rental property? And we would, at the first, get creative with it. And we would look, the only way we would do it is we would have to use the market rent on the appraisal, and they would have to show like a 12-month ledger of payments received. And it just really didn't make sense at that point, because the demand was only increasing and people were only getting more and more money from these short-term rental properties. So, you know, we reviewed the market, we reviewed the space, we talked to our financial backers, and there are, you know, data programs out there that aggregate all Airbnb and VRBO and short-term rental income from true properties from other comps in the area. And we use one called AirDNA. And so we were able to actually, you know, pivot our loan product and get flexible and creative and base your DSCR, which, you know, you need to cover it for us to be able to finance the property, based on actual short-term rental income comps in the area from your property, not the market rent, because it's not even close to what people are getting for their short-term rentals. So we noticed the demand picking up. We pivoted our programs and came out with this product, and it's been a home run. To Mark's point, any property like over $1 million was almost very difficult to hit market rent and cover DSCR, but it's very feasible on our short-term rental product. So it doesn't need to be leased. We'll finance a purchase. We'll finance a cash out refi, rate and term refi, and even with, you know, everyone's seeing the fluctuations and drastic rate increases in the 30-year loan product, the income that's coming in from these short-term rentals is significant enough to still cover the DSCR by 2.5, even 3 in some scenarios. And it's really the most interesting thing about it is it's not only vacation markets that we're seeing. It's not only beachfront properties in Florida or $500 $1 million homes up and down the coast. We're seeing them all over the place. Like, a couple, streets off, a couple blocks off a river in a mountain zone where the properties are anywhere from 150 to 200K. So, it's really going to cater to all investors who want to get into this space. I mean, and I'll pass it back to you and James to get into that a little bit. You can really fit yourself into this market no matter where you stand financially, as long as you're willing to take a swing at it.
Yeah, and just to piggyback off of Matt, what he was basically saying too is short-term rentals are selling experiences now. In fact, Airbnb themselves changed their algorithm to be able to search for an experience rather than a place to stay. So in Maryland right now, we've got a big concert going on at the boardwalk that has about 40 different bands. And if you just put them in the search, it's called Calling Ocean, all of the Airbnbs that are open during the time of that will show up and book and give you opportunities to book. And so that's kind of where this is moving to a lot. And it goes for anywhere. Like if you're going to go to watch a Jets game, my friend James is a Jets fan down there. I'm very sorry about that, James. But if you wanted to go to a Jets game, you could actually put in the game, and again, available properties that are by the stadium would show up and pop up. So that's kind of what some of these sites are doing. I wanted to show you, because you did mention how we're qualifying these different houses, and we're using a site called AirDNA. And I wanted just to kind of show what it looks like. This is actually one of the properties that I own. This is what it looks like right here. So this is an actual, this isn't even a house. This is a mobile home. If you look at this, this is by the beach across from the pool, but you can see the annual revenue on this house is about $37,000. And this is an actual number because I made about this last year. And this year we're going to do close to $40,000 on this house right here. Okay. Occupancy is about 62%, and it gives you a daily rate of average. This is very, very accurate to the real data that I personally experienced. If you scroll down here on this data, it shows where all of the other comps are coming from. And it also gives what their revenue numbers are on those different comps out there. You can actually see how you're performing against anybody else in the space. So it's a real nice tool to use. And it just goes to show that, if you're looking at a regular model or something, where you're going to value this house at $37,000 a year, you're going to value that at $300,000, $370,000. That's why this doesn't make a lot of sense. You guys would probably kick yourself if you knew I paid $25,000 for that thing, and that's what I paid for it. So it's you can find these opportunities right now if you're looking in the right places. And speaking of that, let's turn over to James, because James has a really unique take on just investing in general, and then how we developed the company together to buy more of these.
Yeah. So, I mean, first, while you guys were talking, it's kind of important because I don't think people understand this. Like the short-term rental thing is not a new thing, right? We just got back from a conference in Miami. I talked to a couple that's been doing this for like 25 years in Naples, Florida. I mean, even when I was younger, long time ago, decades now, after high school, when we wanted to go to the beach, we rented a beach house. We did it for either a long weekend, 3-4 days, or a week, paid, $3,000-$4,000. It was very difficult to find. It was spread out all over the place. There wasn't like one place that was aggregating all of these like listings or anything like that. It was a little shisty. You're paying deposits. That it was a little unorganized. How you're going to get the keys and kind of how this is all going to work. But it's always been around, right? It's always been kind of a model. If you go back to 2015, 2016, when the real estate market really started heating up again, a lot of people started getting back into investment real estate. They either were returning or they were new kind of investors, now kind of more confident after the whole resolution of 2008, 2009, and all that fallout. And they started with what, the bread and butter of real estate investing, which is like fixing and flipping a property. So everyone was getting in, buying, cheap properties, putting in some work, selling them for a profit, making, 30, 40, 50 grand and kind of repeating it. Right. And the market, was going up, but it was going up more based on historical returns. It wasn't anything crazy. As the supply started to dwindle and it became harder to find properties, people started buying some of these properties that were more turnkey or just needed maybe $10,000, $15,000 of work. And they started renting them out for long-term rentals. You collect your, $2,000 a month or your $2,500 a month. You pay your mortgage payment, which was $1,500 or $2,000, and you make $500, $700, $800,000 a month in cash flow. Okay, so that became like a pretty good strategy. As rates started to go up, especially more recently, you went from 2.5, 2.75 in a conventional rate, maybe 3%, 3.5% for an investment rate, all the way up to 5.5%, which is what it is about now for conventional rates. And investment rates are like in the sixes. It became very difficult to cover that mortgage payment with such a much higher interest rate. And you weren't making as much money. So now what people are starting to really get into is this short-term rental market again, because now when you have a 6% interest rate, it's not really the end of the world, because you're not just making $2,000 a month or $2,200 a month. Like Mark said, you're making $400, $500, $600 a night. And you can make $30,000, $40,000, $50,000, $60,000, $70,000 a year in some of these places. And even though you may be overpaying for the property a little bit right now, scared about what the market is going to do and whether prices are going to correct, it doesn't matter if you're cash flowing like to this level, right? Because you're paying off that high mortgage, you're quickly creating equity in the property as long as you own it. You're cash flowing like crazy. You're kind of interest rate immune at the time. It's not the end of the world by any means. And no matter what happens, if properties drop 20% in value tomorrow, as long as there's still demand for short-term rentals, you're still going to be making money and you're still going to be on the right side of things.
And James,
as I said earlier, I felt very good about the, Marriott and Hilton buying up all these properties, as well as the hedge funds like Blackstone and BlackRock. Like, these guys are just buying up single family homes and gobbling up the whole market because they believe in it, right? So if the big investors and the big money is going into it, I feel good about holding it. And we're coming off, historic pandemic, which basically stopped people being able to travel and go the places that they wanted to go for the last 2 years. So now we have a huge pent up travel demand that by all estimates is expected to last between 24 and 36 months. So that's this year, next year, following summer, right? And right now, if you can buy a property, even if you're buying a little overvalued, you're getting a high interest rate, like I'm good with making, $40,000, $50,000 revenue on a place that we spent $225,000 on for the next 3 years, because I've essentially almost covered all of my costs. Even to get to that point, I can make a decision at that, year 4 and kind of see where things are going. And that's what Mark and I are doing. We started raising a little bit of money and getting into the short-term rentals. We started buying some beach rentals. Like Mark said, they're very popular in the spring and the summer, early fall, but year round. I mean, if they have a concert in the winter for or a music festival or a conference or anything, people are still going to book out those rooms, and we're still going to make revenue and cover payments. But at the end of the day, when we look at the the revenue that we've collected, it's far superior to what we're paying out in both investment returns to our investors and mortgage payments, taxes, everything else. So right now, this is really the only thing that people are making money with. Some people are niche and they're building houses or building multifamilies or doing other things. But for the most part, most normal real estate investors are getting into this because this is where the money is today.
And to co-sign on that, I mean, think about this. The average short-term rental Dscr, so the ratio that we're calculating to give a loan based off of how much money the property makes, is a 2 to 3 times the payment on that loan. Most of the ones that we have are running at 3.5 to 4.5 times. And I wanted to say, James bring a good point up in regards to the demand. I'm going to share a slide with you from my own personal back end on Airbnb. And this slide is going to show you exactly the emails that I received. So right here, if you look at this is pre-COVID, I had this property. This is that property that I bought on 130th Street that I showed you on the Air DNA was about 158% increase in the comparable homes to last year. And then take a look at this next slide here. This is after COVID, right? April, 1,406% increase in people looking to buy a short-term rental. This is the data that I get that tells me, hey, Mark, you need to buy more properties because people are absolutely dying to rent. And that's why this slide is so awesome, because it kind of shows like this is a year-over-year growth, and that is just an amazing upside that you saw because of the pandemic. All right. And I also wanted to share, we got about 5 to 6 minutes left, but I wanted to share real quick, what we like currently have right now let me pull up the Airbnb. So this is just a summary of what I have active. So, and these right here, so this one right here, this is a lakefront that just got listed. These all just got listed within the last couple of weeks. This Sandy Hill and Sunshine and the Beach Getaway, these were all active listed beginning of the year. But you can see all of these have been, there's half of these that just got listed within the last 30 days. And we have bookings all throughout the summer already, minus the lakefront that just got listed last week. It's got open. This one on the bottom is not active because we're actually selling it. But all of these are completely booked out all summer long. You're going to have a great demand. You can see the numbers here: $1,100, $2,200, $2,200. This is for 3 nights.
Hey, Mark, how difficult is it for you to manage this stuff? Like when you buy a new property, how long does it take you to get a new property up and listed on your site?
Well, it depends on how you buy it. It's a good question, but to just let everyone summarize it, our business model, and I'll have James kind of speak about it a little bit, but our business model for when we purchase stuff, we have to put money into the technology turnover, right? Because all these houses need to have some source of technology to enter it, to monitor the outside, make sure it's safe, make sure nothing bad's happening. People are not being deceitful on number of people inside. There's a lot of hacks. We don't have enough time to go over the inner workings of actually what you need to put in each of these short-term rentals. But there is a technology turnover. And of course, you put smart TVs throughout the house. On all of those rentals, we do not have a cable bill. We just have internet, right? Because everybody that has a smart TV has access to their stuff at home. So you just need to have your internet. You need to have some amenities inside the house. You need to have things like board games. You would be crazy to going to a thrift shop, spending $5 on board games. How many comments you get about, I haven't played a board game with my kids in 2 years. Just something simple as that. You want to give them that home feel inside. And the other things you want to do is just spruce it up a little bit. A lot of these places need a little bit of TLC. They need a little bit of turnover, and you have to know who your market is, who's renting your place. We like to cater our places to families and people with pets at all possible, because people pay more if they can bring their pet along. And when they have kids, they're typically, going to not, have big blowout parties, right? They're going to have kids, they're going to just relax. And, we want to make sure our properties stay in good shape. But again, I think, you're also setting your houses up for these types of things, bunk beds and bedrooms for kids. You have your king size bed in the master, you set them up for families. And then, like if you have other people going around, like they'll work it out, right? It's not going to deter, the golf outing for, a bunch of 40-year-old guys. They'll figure it out. So go ahead, Matt.
No, I just kind of wanted to touch on a couple more items at Templeview, which is, why utilizing Templeview for this type of financing is straightforward and easy and simple. And then I kind of want to pass it over to James about raising capital for this, okay? Because I have friends who are not in this industry who know what I do, who are looking for investments. With the volatility in the stock market right now, no one wants to dump their money into the stock market, and the demand for Airbnb and short-term rental is clearly there, and people want to diversify. Templeview Capital, we're not going to review any of your assets, where they came from, no bank statements. We're not going to look at your tax returns. We're a true asset-based lender. We're going to verify that short-term rental income, verify the property value, and then just see a snapshot of your accounts and make sure you have enough money to come to the table with closing with. So that's kind of what I was alluding to earlier, is that I think anybody, no matter what your financial state is, can get into this space and take advantage of this short-term rental market today, just by getting creative with it. So James, if you can give me like a 60-minute breakdown of how you and Mark kind of raise friends and family money and what you did from there.
Yeah, sure. So it's actually very easy right now to raise money for this, because 3 years ago, if you were paying out 5-6% every month to an investor that you borrowed money, so say you borrowed $100,000 from 10 people and you raised $1 million and you were paying out 5%, they were happy with that. Today, I want to believe people are still happy with those returns, because it's difficult to make money in the stock market with it being so volatile. Difficult to make money in fix and flips. It's difficult to make money in long-term rentals. It's hard to make money if you put money in a bank account with no yield. There really is CDs, bonds, like nothing really makes money. But to really make it easy, you can offer a better return at this time. I think you can go up to 8-10%. And you can borrow money, as a loan. You could put it on a 3-year schedule. You can borrow money, as an equity part, whatever you want to do, however you want to structure it, make it comfortable, you can do it. And you can usually entice people right now, because the returns that you can pay them can be amazing, right? So you borrow $1 million, you pay 10%. You're going to do everything in cash. You're not even going to put loans on these properties. You buy 5 $200,000 condos on the beach, right? Like, back in the day, that really wouldn't make sense. You put long-term renters in there, you try to rent out as a beach house, you're scrambling around trying to market, you're doing everything yourself, not making money. Now you put on Airbnb, you get a property management company, take care of all this stuff. You own the houses free and clear. You own 5 houses for $200,000. Each house may make $50,000 right now in revenue. If you own it free and clear, the only person you're paying back is the investor. So you're paying the investor at 10%, $100,000 a year, which seems like a lot of money. But it's not a lot of money when you're making $50,000 per property times 5 properties. You're making $250,000. So now you're paying back $100,000. You're making $150,000. You may have $25,000 of additional expenses that you have to take care of. The cleaning fee is already part of the Airbnb fee, so you're not coming out of pocket to do that. The cleaning fee is usually a little bit more excessive. Like, what you end up collecting for cleaning fee is a little bit more than you end up actually paying out, or what it costs, especially when you have several Airbnbs in the same area. But this is really how people are making money. Like, I saw a story the other day. They were literally just going around, finding, I think someone asked this question in the chat as well, but apartment communities that have kind of liberal rules where you can sublease the apartment. And that's probably about 25% of all apartments allow you to do that. If you can find apartments in good places that people want to be, and you could rent out an apartment. I saw people taking $2,500 long-term leases and then just turning around and flipping the property and putting on an Airbnb, because it was allowed by the apartment complex, and they were kind of arbitraging between what they paid in long-term rent and the insurance, of course, and then what they were collecting back in Airbnb revenue. And I think James, just on that model, they were making $150,000 a year.
And James is, he'll talk everyone's head off on these great numbers, but the short and sweet of it, with Anthony poking his head back in, means we're getting low on time. But your cash on cash return for short-term rentals, leverage, meaning with a loan through Templeview or somebody that's going to finance you on this, is going to be around 35 to 45% cash on cash return. The numbers, I've seen them, I have them. They're basically between those levered returns. If you're going to pay all cash and not have levered, cash on cash return is in the 20s. So, what does that tell you? You always want to be levered out. You want to be able to buy more of these. And let's put it this way. Again, you do not have to have a history of rental income on short-term rental in order to do this because of the technology that we have behind these loans. And I know we are at the end of it, Anthony. So can we stay on another half an hour here, buddy? I'm just kidding. We got to let you take over.
Yeah, by all means. I know you're going to be back for your webinars, where I know you do stay on for at least an extra 2 hours. So yeah, by all means, guys, it was a real honor to have you on, and it's always a pleasure to have Temple View. You guys always bring in a big crowd of people, and they're always very, very excited just to view your webinars. I know your CEO is coming back to do a presentation, a CEO presentation, and we have yet to do a web talk with you. So that's going to be exciting. It will be live. It'll be less talk and more, and tremendous amount of questions. So that's what you usually get, a lot of questions here. Once again, people, I will be making a copy. I know that Matthew's copying chat and James is copying Q&A, and we will try to get their answers to you right away. And we want you to continue to ask questions to Temple View thereafter as well, because I know there's a lot of people streaming and they're going to have a lot of questions as well. So once again, we want to thank you guys. Mark, you're amazing. Your team is amazing.
No, we appreciate you. I mean, it's all about you, man. Anthony,
I tell you, you need them both. You need virtual, even though everybody wants to. I'm a junkie, exhibitor junkie, live exhibitor junkie. I love going to live trade shows, but I realize the value of virtual as well, to get the message out, to get the logo out, to get the faces out, and it's right there. You don't have to jump in your car and get down to AC and see you guys. You're right here. So they work hand in hand together. So I'm happy that we're doing virtual, and I'm happy to get back to our live show in November in New York City, as well as doing a lot of smaller shows soon to come in January in South Carolina, North Carolina, Georgia, and Tennessee. And we'll keep everybody posted on those. Once again, guys, this concludes our webinar. And I want to thank you, James, Matthew. Pleasure meeting you both. And of course, Mark, I know. And thanks, guys. It was a real honor.
Thanks, everyone.
Thanks, guys. Yeah. And reach out. Anybody that has our information, reach out. We'll be happy to answer anything about loan level questions, or possibly coaching you on getting your first Airbnb. If you already have a couple of them, let us know. We can give you some leverage. So thank you guys so much.
Email in the chat. So if anybody wants to email us directly, they can with any and all questions. We can set up calls, whatever you want.
Cool. All right. Thank you, guys.
Thanks, James.
Thanks, Anthony. Thanks, everyone.
Bye, guys.